Welcome to Credit 101. Today we're going to discuss what factors influence your credit score. Everyone in life has ups and downs with their credit. We all start with no credit and to have it go up, and then often at some point in most people's lives it goes back down, and then we have to rebuild it back up again. So today we're going to review some of the factors that influence that. As you all know, credit is very important. You need credit for everything you can imagine in life, from getting your first house or apartment to jobs, cars, insurances, businesses, on and on and on. Credit seems to always be an issue. When you have good credit, it's very easy, of course, to get credit. But if you have bad credit, it's very hard to get credit, and you often end up paying double, triple more than what you would have to pay if you had good credit. So we're going to review some different things that I've learned from working in the credit and collection industry for the last 20 years. I've worked in all types of aspects of the business, and I've also owned several businesses related to the credit and collection industry. So I'm going to share with you a few tips in the time we have that I've learned that hopefully will help you. All right, so let's start out with credit score. This is a score that determines what basically if you have good credit or bad credit. Credit scores range from 300 to 620, which is bad credit, to fair credit, which most people have and you can get a lot of things with, 620 to 680. Good credit is 680 to 730, and then 730 and over is excellent credit. All right, so who picks your credit score? There are 3 credit reporting agencies in the United States. There are Equifax, which is based out of Atlanta, TransUnion, which is primarily West Coast, and Experian, which is kind of in the middle. These 3 companies are all privately owned companies. They make their profit or money by selling your credit report to different lenders, banks, etc. And then they also charge them to report to your credit. So they are out there for a profit. They do make mistakes. And they're not affiliated with the government whatsoever. They're just regular businesses. So, if you ever find any errors, of course, dispute with these people. All right, so today we're going to talk about what is credit, the bureaus, what types of credit there are, what brings your score up, and what brings your score down. So the first thing we're going to look at is what raises your credit score. So the different factors that raise your credit score are your payment history. That is the highest percentage that influences your credit score at 35%. That means, don't be late. If you are, dispute that or, attempt to remove that as quickly as possible. The balance is owed to available credit. What that is you do not want to max out your credit cards. The best rule of thumb is 60%. So you want to, if you have a $1,000 credit limit, not take that balance over $600. Once you go over $600, it will start to affect your score. And then also, of course, you want to have as much available credit as possible. So when you have good credit, you want to increase and build and open new lines of credit. That will, of course, raise your availability overall to the amount that you owe and help your score. Next is your length of history. What that means is you need to have at least one account on your credit report that is old. So if you're young, starting out with building credit or starting out with rebuilding credit, really the only way to accomplish this part, which is 15% of your credit score, is to have someone add you as an authorized signer on a credit card that they've had a long time. Obviously, you want that credit card to have, a high balance or high limit with a low balance on it, if possible. But having that older account really trumps those other factors because it's very important. Next is credit mix. Basically, what that means is you want to not just have your credit report be credit cards. You want to have credit cards. You want to have loans, a car loan, preferably, or some other type of installment loan, and if possible, a mortgage loan. That's a good credit mix, and that is a portion, accounts for 10% of your credit score. Lastly is new credit. You want to be opening new credit every year, or like I said, when your credit is good. Do not wait until you need the credit because you often will not be able to get the credit when you need it. All right, so next we're going to talk about what takes off of your score. So obviously, when you're late on your credit card payments, that takes off of your score. Some of the ranges are 100 points to more. When you're late to your credit, the credit card companies, mortgages, auto loans, they will report 30 days, 60 days, 90, 120, and after that it will charge off. That means the company has written it off and they will no longer report that account to your credit report. It will just say charged off, and that's it. They no longer report monthly like they were previously. Those will affect your credit. Obviously the more recent they are, the more impact they have. So the first year or so, it will have the highest impact, and then it goes down from there. The biggest effect negative items can have on your credit is the public records section. Bankruptcies can drop your credit score 350 points. Liens and judgments can affect your credit score 200 points to 150 points. Judgments are when you're sued on a debt or for whatever it may be, and someone's obtained a judgment against you. That's in the public records section of your credit report, right at the top under your personal information. And anything in that section has a huge impact. So those you want to avoid at all costs. And then lastly, what affects your score is inquiries. These are hard inquiries when you go to apply for things. Every time you apply for an item, your credit score will drop 3 points. Inquiries only stay on your report for 2 years, but you can work to dispute them, to take them off, or just, be conscious of how many places you're applying. If you want to get a car loan, don't apply at 10 places and shop rates. Call shop rates over the phone. Let them pull your credit last resort. Get all the information you can. Don't pull your credit everywhere. All right, next we have the different types of credit. Most of you already know this. There's student loans, credit cards, there's houses, there's business loans, there's cars. All right, so in building your credit, the fastest, easiest way to build your credit is to have a cosigner or have a family member or a friend add you as an authorized user on their credit card. What this means is they have added you as an authorized user, so it will show up as a trade loan on your report. However, they can have the card sent to them. They never have to give you the card. You never have to use it. But just by having that on your credit report, that is the fastest, best way to raise your credit. Next is, since you're a student, that's actually puts you in the perfect position, is applying for student credit cards. Student credit cards are much easier to get than other types of credit cards. So by applying, by being a student, you can apply for those and get those pretty easy. Next, after maybe getting some student cards, a lot of times you may have to wait 7-8 months to a year if you're just building for that first time. After you've had, say, that student Discover card is a great one to start with. No interest often or low interest. After a year, you'll see the offers will start flooding in from other credit card companies. But you obviously have to keep that Discover card current for a year, use it a few times or, decent regularly. Keep it under the 60-70% of, balance for whatever your limit is. And a year after that, you'll have a wide range of options. So after that, store cards, Macy's, Kohl's, Target, those are some good ones. Secured loans. This is another option where you always have a credit union in your pocket. Credit unions are going to be your best friends for getting car loans, loans, anything. They'll often help you when your credit score drops. They're fantastic. So, open a savings account, get $1,000 in it, go to your credit union, take a loan using that $1,000 as collateral, pay it off 2 or 3 months later, and do it again, and do it again, and do it again. And use those to build your credit. Mortgage loans and business credit cards. Mortgage loans are surprisingly easy to get. I don't have time to go into it as much today, but you only need a minimum 640 score, 3.5% down, so they are pretty easily obtainable. And then one thing I want to tell you about business cards. Business cards are great. You don't have to set up a corporation. You can do it under your name, sole proprietorship, like a lot of businesses are. But business cards are great in that they don't report to your credit. So if you have good credit and you open a couple business cards, and you ever, for instance, have to use some of those credit cards, you find yourself in a situation needing to use them, you can transfer those credit balances to your business credit card and they will not show up on your personal report. The only time they will be on your personal report is if you don't pay them. So business cards are great in that aspect. And one other tip I want to talk about is student loans. Student loans are obviously great. We all need them or use them. But one thing to keep in mind about student loans is be very careful. You can never bankrupt them. You will have to pay for them no matter what the rest of your life. There is no forgiveness on them. So if you drop out of school or you decide not to take class, they quickly move for garnishment and repayment. So those are federal mostly often federal loans, and they have different law requirements for repayment. They're kind of like taxes. So keep that in mind. All right, so next we want to talk about is what to do. My spreadsheet has stopped working. What to do if your credit goes bad. I'm sorry, guys. Okay, so when your credit report goes bad, you will, like I spoke before, the 30, 60, 90 charge off. A couple things. So mortgage, once your account charges off, you want to try to settle within 1 year. If you have some older charge offs, it's honestly a good thing to dispute them. If you pay an account that's been charged off for several years, that account no longer is being factored into your score much. You can actually reactivate that bad account being factored in and cause more damage than good. Another thing I want to share with you about falling behind, if you fall behind on your mortgage, never let it go 120 days. At 120 days, they will start foreclosure and they will want all of it, all 4 months that you are behind. Versus if you're 2 months behind, you can pay 1 month and you stay without foreclosure. You're 3 months behind, you can make one payment and you stay without foreclosure. 4 months behind, now you owe all 4 payments plus whatever fees on top, and now you're going to be paying a huge amount of money one time, and that really is hard, if you ever get in that situation. So keep it out of that 4 months if all you can possible. Next, if you fall into, charged off accounts, try to settle within 1 year. Offer 20 cents on the dollar. They've written it off at that point, and they're not going to sell it for more than that. So offer low. After a year, look at disputing it on your credit report. If they start going to collections, send cease and desist letters to the collection bureaus. Google what that is. Send those out to avoid the harassment. Now, bankruptcy. In my opinion, you should only consider bankruptcy if you are being sued and you are at risk of judgments or liens on yourself and garnishments of your wages, then file bankruptcy. If people are threatening you, collectors, that's their job to threaten you all day long. 9 times out of 10, they don't do anything. Only if you're being sued, I recommend bankruptcy, or if you need to stop foreclosure. If your house is facing foreclosure, a bankruptcy will stop that. And then lastly, credit repair. Credit repair can fix everything. I mean, even bankruptcy. I've seen credit repair take bankruptcy off of people's credit. So there's always solutions to get your credit fixed. And it does take time. It's not an instantaneous process. It takes months, but it definitely can be done. So I hope some of these tips have helped you today with just a little brief knowledge in this time we had on your credit. So thank you for listening.